Okay, good afternoon, everybody. Thank you very much for joining us this afternoon on the launch of this book, which for Shadreck and Huybert has been a labor of love. I've known Shadreck for quite some time, about 5 years now. And if there is anybody who is passionate about his subject, it's been Shadreck. In fact, I have to remind him that it's actually important to speak about your work sometimes. So I'm glad to see him here. We also have a very distinguished panel, and I will introduce them as they make their remarks. But just to kick us off, I'd like to invite Jayla Baisoglu. I hope I got that one right. To make a few welcome remarks. Thank you.
Thank you, Sam, and I'm sure that was stressful. I have a long, difficult last name. Welcome, everyone. It's great to be here discussing this very important project for us, and we are very fortunate to have the two authors, Shadreck Mapfumo and Huybert Groenendaal. And I'm sure we will have a lively discussion as they will discuss the book and the key takeaways from the book. But before that, I'd like to just say a few words on the publication and what impact we hope that it will have. So it's just to set the context, as all of you know, I don't have to tell this group that many of the world's poor and people are vulnerable to climate shocks such as drought, flooding, irregular rainfall, and all sorts of other natural disasters. And we all know that this actually hits the most vulnerable the most, which the extreme poor. And insurance is a very critical risk management tool to deal with some of these issues and for vulnerable people that are threatened by the high impact of these adverse events. And index insurance is actually a very innovative approach to providing insurance. I should be honest and tell you that I worked many years at the IMF, so I learned all about this since coming to the bank 2 years ago, and I find it very fascinating, and it's a great way to really have impact on the ground. And the benefits of paying out the benefits on the basis of predetermined index for the loss of assets and investments when those losses are the result of weather and other catastrophic events. It's a very innovative approach, and as I said, it's very impactful. It really has implications on the ground. It allows for the claim settlement process to be quicker and much more objective, and therefore has a great potential for improving risk management and as one of the key mandates of the World Bank Group, a major role in reducing poverty. The GIIF, the Global Index Insurance Facility, through the World Bank Finance and Markets Global Practice, is committed to helping our member countries in terms of developing their local capacity, as well as evaluating, pricing, and distributing index insurance products. So this is a critical objective and program of the global practice, and it really fits very well with the agenda on climate risks and food insecurity, which we hear almost daily the President talk about. So it is very much a critical part of our mandate and a very critical part of our global practice. And this is especially relevant for regions like sub-Saharan Africa, and where a large share of GDP and job creation is concentrated in the agricultural sector. But of course, it is a challenge. Developing index insurance is a challenge. It's a relatively new product, and is rarely offered by insurers in developing countries because it's perceived as a very complex and complicated product. So there is a knowledge gap which remains to be filled, both in terms of disseminating the approach, the objectives, and how it can be done. And the book that we are launching today goes a long way to really help reduce that knowledge gap. And the book is, what I really like about the book is it's a practical guide to help insurance industry design and develop better insurance products and ultimately provide product protection to those that really need it. The book consists of two parts. The first part is a summary of the insights and decisions required for the insurance managers to make informed decisions about whether to launch and expand index insurance business line. And the second part is a much more step-by-step guide to modeling performed by actuarial analysts. So my hope is that this book will enable practitioners, both managers and analysts, to take ownership of index insurance in their markets and disseminate it and develop a much faster and much more sustainable way to with better product offerings to those that really need to use these products. And in the next 3 years, we expect 15 countries from Nigeria to Bangladesh to Ukraine to be able to develop index insurance products on their own with some technical support, but on their own going forward. We expect universities and entities in 5 countries to incorporate these modules on index insurance in their curriculum. We had a very good discussion with Fatu and Shadreck as well, because I would love to see an online course on this topic. I think it would be great to disseminate it even further. So to give you just one example, because I don't know if the authors will advertise themselves as much, the Insurance Regulatory Authority in Kenya has asked for this book to be distributed to the 300 delegates in an upcoming convention on July 6th and 7th. So they clearly see the need and the usefulness of the product. So we provide support. Our experts have been really going all around the globe to help countries think about this and see how they can tailor it to their own circumstances. Shadreck has just come from Ukraine and recently conducted trainings in Ghana for regional practitioners as well as regulators. So all this is to say that this is a very exciting time for us to launch the book, but also disseminate it much further and think about innovative ways of how we can do much more in this agenda. So thank you again for listening to my few minutes advertisement, if you like. A big thank you to the authors who are here, as well as to our speakers from AIG, the West African Insurance Supervisors Association, and the International Actuarial Association, because I'm really looking forward to the discussion and hearing views about what works, what we need to do going forward as the World Bank Group, and to make this agenda as fruitful and conducive to reducing poverty as possible. Thank you. So,
Taylor, thank you very much. I think between you and me, we've got the advertising for this book cornered. We'll discuss commissions later with the authors. I have the incredible privilege of managing a team that has different business lines. And I'll have to confess that when I'm speaking to my father and I want to sound a little bit intelligent, I start off with index insurance. There's a nice ring to it. Shadreck and Huybert have done a wonderful job of summarizing and making this really intelligible for the industry as a whole. And what we'd like to do now is just give them 10 minutes to just walk us through the highlights of the book, why they wrote it, and what they're expecting to get out of it, before we invite our illustrious guests to provide comments on the publication. And just in case you're tempted to leave because your stomach is rumbling, there is food that's being prepared. So we'll keep this short to an hour, and then we can grab something to eat as well. Thank you.
Okay, thank you very much, Taylor, for actually asking us to have this launch, and also thank you very much, Sam, I think, for supporting us from the beginning. I think, as you highlighted, we have worked together, I think, for the past 5 years, and you actually encouraged us to go ahead and come up with this as a book that can be used not only within the IFC and the World Bank Group, but also a book that can actually be used as an industry resource. So what my colleague and I, Huybert, are going to do now is just to walk you through the things or the reasons that actually drove us into writing the book and publishing it. Okay, so I think most of you, when people hear about index insurance, especially in Africa, the type of the countries that come to mind for you is countries like Kenya, because I think we've had a lot of development that has happened in Kenya since 2009, and you also feel or hear about progress that has happened in Mozambique and countries like Zambia. But most people don't know that actually index insurance in Africa started in Malawi. We started with the Commodity Risk Management Group, and I was actually the local project manager. And so I worked on that from 2004 until 2009. Then I left the country. I was transferred to South Africa. After that, the project, which was the meso-level project, it stopped. But one of the, in 2010, one of the days I was at the airport, OR Tambo International Airport. I met Eric Chapola with the CEO, Nico, and I asked him, started chit-chatting and said, Eric, how far is the index insurance product that we started in Malawi? And he said, oh, well, since you left, nothing has happened. I said, so why is the problem? He said, oh, okay. You know, at times when you come to a place and you give people fish and you don't leave a rod, a fishing rod, and teach them to fish, what happens is when you leave, nothing's left. So the idea, the thing is, you came, yes, you trained, you helped us, but you never left anything that our people can go and refer to. So we then started thinking of, okay, yes, we can be going around, we can be doing trainings, but after we have left, what do we leave behind that people can be referring to? And then we definitely felt that what we need is, yes, local capacity building. But local capacity building can only be strong enough if we are leaving resources like books and pamphlets. Some of you also know about the microinsurer exit from the Rwanda market. Again, they were there for about 3 years, and as you can see from that picture, I think if you can read, I think at the bottom it's not very clear, but what it's saying there is crop insurance to suffer because the broker which was offering the product was going to be leaving. So which means all the capacity that was in the country then, it was capacity coming into the country, and then the moment the company felt that it was not profitable for them, they then decided to leave. But also one of the things that had also happened, I think in 2013, was microinsurance, one of the companies that had been approached by a bank. They were asked to offer a product, and they offered a product which the client thought it was going to pay, I think, more frequently, but it was actually a catastrophic cover. So when the time came and there was no payout, the client thought, well, I thought I'd paid for a dry spell, but microinsurer was also saying, no, but actually we offered you a catastrophic cover. So we actually felt that the gap in communication is because I think we don't have tools that insurance companies or insurance brokers could actually use to do the communication. So when we then decided to write the book, one of the things we wanted was to make sure that we are also giving tools for communicating between specialists and non-specialists, which is the reason why you find that part one of the book is really focused on communicating with non-actuaries or non-risk analysts. But also one thing that I was excited about is about 2 weeks ago, I don't know some of you if you have seen that in Zambia, I think the government has indicated that for the program, for their subsidy program, everyone who is going to get a subsidy they have to be insured. So they're going to be contributing. Each farmer is going to pay 400 kwacha, and 100 kwacha of that is actually going to be used to pay for index insurance. But then the question that comes is, if we are going to be covering a million, I think it's 1 million farmers, then there's definitely need to make sure that we are offering the right product, which has been well designed, well evaluated, well priced. And we think that such tools as this will actually help us to not only make sure that we are giving the right product, but also making sure that the quality of the product is of high quality. Because normally what happens at times, you find that the people say index insurance does not work. But it's not index insurance that doesn't work. It's actually maybe the product that would not have been designed well, or people would not have communicated the difference in covers that they are offering. So here, what we are really trying to achieve here is we are trying to make sure that we can offer a long-term sustainable solutions, which is really passing on capacity and promoting transparency and responsible insurance principles. And as I said, I think we are hoping that we are giving the fishing rods and teaching how to fish as opposed to providing the fish. I think basically that's what we hope we are achieving. As I think it was highlighted again by Taylor a few minutes ago, with her support and the support of the directors and managers, we have initiated, I think, trainings, which we started in Ghana. We've trained over 12 regulators, over 29 CEOs, and the support, I think, as we will hear from Mr. Curry, the support for that initiative has been quite strong, and we are hoping that we'll continue to offer the trainings. So what we have today, this book is really a book that we have done on risk modeling, but what we know is part one of that, even though it's meant for managers, they don't have time to read it. So what we did is we went ahead and then developed even a more summarized version, and we've distributed about 1,000 of these. And the demand is we still have a demand, more demand, like 300 were asked before, 150 from Zambia. So you can see that there's quite a demand, but there will also be need for us to continue developing more tools. I think I would ask my colleague, Huybert, also just to talk about their involvement in the development of the book.
Thank you. Thank you, Shadreck. So I'm here to help present a little bit of the book, and what I want to do actually is I had a few slides about talking about why we were passionate and why, as a company, we wanted to help write this book. But before I do that, actually, writing a book takes quite a bit of time. I think we started about 3 or 4 years ago. So first one, actually, thank Shadreck for his leadership and taking us through writing a book together. Because writing a book you don't do sort of overnight, and just having someone to work with like Shadreck is really, really fantastic. So I wanted to sort of talk about the book in a little bit more general sense, and why we're excited about helping here, with sort of the general objective being, how can we improve analytics to make better decisions, and better decisions related to index insurance. So when we think about that, there's actually sort of two components on it. One is sort of how can we improve decisions, another one is how can we sort of improve the analytics. So if that's our goal, we actually have a number of challenges ahead. And so one of the challenges is a very obvious one, but it's worthwhile sort of standing still here, is that when we're making decisions about, and these are decisions that are going to be personal decisions, they can be business decisions, they can be business decisions around investing in an index insurance product or developing an index insurance product, their future is uncertain. And what we see in our sort of consultancy and training business is that very often, even though we know the future is uncertain, we tend to make decisions that are based on what we think is going to happen, or what we expect to happen, but very little effort is placed on what actually might happen, and the risk around the future. Another, since we're talking here about uncertainty and we're talking about the future, one of the things to help us with getting better analytics is try and incorporate this thing called probability in our decision making. Well, one of the things that we studied quite a long time, and I'll quote here some other people that have started working in the 60s and 70s, but that we as people and as decision makers, we're just really bad at making decisions where there's probability involved. Probability essentially is unintuitive because it is unintuitive. So let me give you an example of that. So let's think about sort of a fairly simple situation where someone is tested for a disease. In this case, we're showing here an example based on David Spiegelhalter. Don't know if you've heard of him. He's also called Dr. Risk. He's a very well-known professor, really does a lot of work in risk communication. So imagine that you have a test, you go to the doctor, and the test turns out positive, and this test is 90% accurate, which means that if the person has a certain disease, 90% of the time it will actually become a test positive. So what's for that specific situation, what would be the probability that this person actually has the disease or breast cancer? Well, maybe you start thinking, well, 90%, it seems like a good first chance, right? And maybe you think about it a different way, but to actually start thinking about this, let's actually think about where we would start with. If you start testing 100 people, and you look at actually, and this is sort of called the base rate, or in diseases, the prevalence of breast cancer disease is about 1%, with a bit of rounding. So if you actually look at how these tests will actually perform on those 100 people, with one being having the disease and 99 not, you actually can do the math that for that one person having disease, the test will probably turn out positive. But for those 99 people that don't have the disease, you still have that 10% false positive in this case, so 11 will turn up positive. So actually, if you do the math, and this is a fairly simple model, as you can see, if you do the math, actually about 8 or 9% probability that you actually do have the disease. So there are many, many different ways where you can sort of show and do little tests that probabilities really can be very unintuitive. And so having models that help us look at the future in sort of probabilistic sense can really help us against those unintuitive probabilities. Another one that comes into when you're talking about better analytics and better decision making has a lot to do with decision making. Also has to do with analytics, but there are lots of different potential biases we may make in our decision making. Things like being overconfident, recall biases. You probably have all heard of Daniel Kahneman and Amos Tversky. They won a Nobel Prize on decision making and biases. If you haven't, I would certainly highly recommend you pick up one of their books sometime. But these biases can really creep in when we are trying to make decisions. So this book is also trying to help with how can we use more data to inform our decision making, and not just go for intuition and biases. And then finally, I think a central premise of the book is that when you want to inform decision makers, you have to talk in a language that's informative. That means we have tried to really go down to how can we explain sophisticated quantitative terms in real personal, in layman terms, so to speak. So, and that can be challenging, but so the way we feel that if you have a fantastic model, but you can't explain it to a decision maker, it was sort of a useless effort. So it's really, really important that we actually, in the book, spend a lot of time on trying to communicate really well what all those terms were. So thank you for that.
Okay, so as I was highlighting, I think for the managers, what we decided was, okay, we'll have part one being the one that we hope the managers will have time to read through, but again, we felt that they would not really have the time to go through each and every word. So we decided to summarize and put it into this summary. But if any of the managers, any of the technical people want to get a little bit more detail on the metrics themselves, after reading this, and if you find that you need a bit more detail, you can then go to the respective chapters that are in this book. And then for the technical people, because all we are trying to do here is we are saying, okay, a manager needs to have to look at a product or look at a situation and be able to make a decision in maybe 5 to 10 minutes. So the metrics are really meant to enable them to make decisions quicker, but for them to be able to make that, someone should have done a lot of work and summarizing that. So part 2 is really getting to help the technical people work through every product, be it from the designing of the product, evaluating it, and then once you have done that, being able then to present the summary, only the summary to the manager. So you'll find that if you are a technical person and you are interested then in understanding really how is each of the matrices that have been discussed in part 1 been arrived, you go to the second part of the book. And finally, I would really want to thank, first of all, our management. I think we've had strong support from the senior director, I think, on the knowledge management agenda. We are aware of that, and it's so uplifting when you know that you are doing something and it's being evaluated, and you are actually part of the goal of the organization. So I would want to say thank you very much, Sheila, and I also want to thank Sebastian and Alfonso, our directors, who have also been supporting us, even with the trainings that we've been doing in the industry. I think we've been able to do them because of the strong support that we have had. And then the managers, David Crash, Alejandro, and Sam, I think, as I was highlighting, they started working with us from day one of writing the book, and they helped us as a team, the GIIF team, Gilles, Fatou, I think they've really contributed a lot to the process as we were writing the book. And we also had some of our team members within the World Bank and others outside who also contributed to the technical design and then also the technical review. We would really want to thank AIG team. They contributed a lot to the review of not only the models, but also the review of the book itself. And Erwin from the Wharton School, I think he read every word in this book and critique, and he had a lot of feedback on each of the chapters that we wrote. Internally, we worked a lot with teams like, amongst them, Daniel Clerk, Julie, Diego here, and Alfonso. They reviewed the book and also gave their comments. The product would not have been what it is without your input and your feedback. So it is not really a product that is for a product of me and Huybert and Chloe only. To me, this is a collective success for all of us. And this includes even the people, the publication team, Steve, Joel, and Adam, who also really tirelessly worked through with us from the beginning to the end. Last but not least, I think I wouldn't do justice to our family if I don't mention them. They really had to bear with us during the weekends and nights that Huybert and I had many calls and working on that. So I would want to say thank you very much for your support, and thank you, and we hope you will continue to support us as we continue with, of course, distributing this, but also as we even develop other tools. Thank you.
Thank you very much, Shadreck. As you can see, the book has gone through a very rigorous review process. In fact, to be honest, I had to drag it out of Shadreck because he kept saying, there's one more thing I need to do. And this applies to even this launch, because when we started discussing names of who could come and speak about the book, again, he set the bar extremely high. And this accounts for the three very senior, very experienced individuals we have today. The first one is Bob, who is the chair of the International Actuarial Association General Insurance Committee. He serves as the international ambassador of the Casualty Actuarial Society, and he's on a number of numerous committees, which would be quite long to mention on this occasion. Raj is the Director of Model Risk Management at AIG. In his capacity, he leads and conducts various activities and contributes to risk assessment, management, and governance within the organization, and we're very pleased to have you here today. And then we also have Muhammad Kari, who is the current Commissioner for Insurance for the Federal Republic of Nigeria. And in that role, he has continued to champion the development of insurance in the industry. All of them very highly qualified. And I should have introduced Huybert, but he's become such a part of the family here that I forget him quite often. What he didn't say about the difficulties of writing a book is that he actually did manage to do it while he was managing director of a full-time consulting firm, which is consulting with several companies in various fields and industries. So that's an achievement in and of itself. We suggested to our guests that they would share some 5 minutes of thoughts about the book with some specific questions in mind. I mean, first of all, I think it would be very interesting for me to hear from Raj how this book on risk modeling actually helps an organization such as yours. Shadreck has already embarrassed us managers and said we don't read these books. So it would be interesting to see whether you actually read the book. The second question, and just to put them out there so that you have time to think about it, I'll put to Bob. I think it's very difficult. The World Bank is in this the World Bank and the IFC is in a unique position of sitting between academia, industry, government, private actors. So how would you see this book fitting into all those different brackets and how it works? And then finally, with the focus and thought of our clients, if I could ask Mohammed to just think through what this means in terms of capacity building for many of our recipient countries and how he would like to see this book be used going forward. So if you just each take about 5 minutes each, that would be useful before we open it up to the team. Thank you.
Okay. So risk management. So I have spent, I would say, most of my life in risk management. And the thing that struck me about the book, the first thing that struck me about the book was the timeliness of the book. And the reason I say that is, if I go back more than 10 years and I look back at my professors who taught me economics and agricultural economics and all that good stuff, one of the things they said is, we are all privileged to study all these techniques. We will learn about regressions and probabilities and, some kind of modeling and simultaneous equations and all that good stuff. And there's a lot of data now, and the world is progressing. So in about 10, 15 years from now, it will be a better world for everyone, right? I loved the vision. My fellow students, we all loved the vision. That's what we want the world to be, right? But last 5 years, if you track, things like the Gini index, the SEN index, and all these various indices, the statement is, I would say, false, right? There have been these tremendous movements in the world that have changed countries, including my own country, India, right? And so where does risk management fit in? So this is the thing that struck me about the book, how timely this book is. Because what we want to do now is somehow pull up the underserved and the underprivileged who are struggling. I am privileged, right? In about a couple of weeks, I'm going to visit India. I fly in a great plane, I land in a great airport, and I have all the things I need, right? But as I leave the streets and I, take a taxi or an auto or whatever you do in India, it's a very different world out there. And the thing that is startling is that the income inequality is enormously great. And I think the timeliness of the book now is that it is showing us a way to help the people struggling through insurance so that they can do their work. My grandmother used to tell me, we all come to work because we want to eat. It's true. She didn't study any economics or philosophy or anything like that, but it's true. And the farmers out there are the ones who are struggling, right? And governments have data, right? So if I take India as an example, there are very sophisticated military satellites out there, right? Can we convince the government to give us a part of that data so that we can use his probability distributions, his case studies, and take it to the government and say, look, there is a social good, there is a benefit, and if we further index insurance, you will also get elected, right? So what Shadreck was talking about is in that the booklet there. So this is about 350 pages. I went through this book. It's a great book, terrific book, right? And I don't know, I haven't looked at that, maybe 40 pages, right? But at the highest levels of decision making, you may only need 5 pages where a decision has to be made. Now, recently, India has made certain decisions. They demonetized notes. And the reason they demonetized notes is, I'm going to help the farmers. I'm going to get rid of terrorism monies so that my country will be better, right? But what we need are the tools in this book. We need the simulations, we need the probability distributions to show them whether a premise is correct, right? It's like Huybert mentioned probability, right? You are tossing a coin. So we learn in school that when you toss a coin, if you want to count the number of heads, they call it a binomial distribution, right? Is that true? It's not true. There is nothing random about a coin toss. When you toss the coin, the laws of physics operate, and you know exactly whether it's going to be head or tail. The problem is the computation is so complex, we go back to probability, right? So this risk management is a way to simplify and give proper decisions to the decision makers. And I think that's the fantastic thing about this book. And the time for this book is actually now. Because the levels of poverty, the levels of income inequality throughout the globe is very high, right? And we have to do something about it, or it will do something to us. Right. So that's I don't know if I finished my 5 minutes, but yeah.
Well, I too would like to applaud the addition of this book to the literature. I think it's really a great addition to the literature on index insurance broadly, but particularly in the application of to inclusive insurance. I have not read every word in the book, but I read quite a few of them, and I really appreciate it as an educational tool and as a manual. The blend that it provides of educational material, technical guidance, tools, illustrations, case studies that appeal to different learning centers in my brain. And in particular, it's easy when you're excited about something to talk about the positives and all the great things that it can be accomplishing. But I think the authors have done a really nice job of also carefully articulating a variety of caveats and warnings throughout the book. And often, as is the case with the doctor's oath, often the most important thing you can do is to not do harm. That's always a good place to start. Is if you're not harming somebody, then you're on a good path to helping somebody. I also saw 3 sort of softer or not so specific themes that are woven through the book that really resonated with me. The first is that there are a number of key ingredients that need to be in place in order for an index insurance product to be truly successful, not just financially successful, but meeting the needs of the community and the farmer and all of the different stakeholders. Some of those ingredients are the environment, not just the weather environment, but the cultural environment, the legal environment, et cetera. Some of them are operational, how are you running the program? Some are related to the product design and so forth. But all of them can be important. And if you haven't addressed all of the different ingredients, then your chances of producing a successful program, a successful product are severely impaired. The second message I took from the book is that many insurance products are not going to be successful in meeting the needs of the small farmer as well as the other stakeholder. Even if the products were well-intentioned, even if all the people involved really had the best intentions, if they haven't addressed all those different ingredients, as I think probably historically has frequently been the case, then the products ultimately are not going to be successful. And even a product that is launched on a successful basis, the world is not a static place. So those products will need ongoing monitoring, ongoing adjustment, and particularly so if you've designed the product in one place and you say, well, it was very successful in this country, let's move it over to the other side of the world and try it again. It's certainly going to need some major retooling to do that. And as an actuary, I was excited to see throughout the book the emphasis on the important role of actuaries and actuarial tools. In fact, much of the process that's described in the book is something that we in the actuarial world would call the actuarial control cycle. You analyze a problem, you design a solution, you implement the solution, you monitor what's going on, collect data that tells you something about how it's performing, and then you start all over again. You analyze that information, you modify your solution, and so forth. And that's really very much the discipline that is, I think, very skillfully laid out in the book, not in a vague concept, but with very specific tools for doing it. I think probably a little bit of a trick is that the book is so well written that you might almost read it and think, well, even somebody who's just finished maybe, they're 10 years old, they've finished 1 year of mathematics, they could certainly master these concepts. And in fact, the concepts there's a lot of subtlety there. So there's really, I think, a significant need for very skilled, very experienced, very sophisticated actuaries, skilled on both the technical side, but also skilled in understanding the context in which the solutions are being implemented, need to be involved. This is not a problem that can be managed by an actuary with 1 year of university education or not. They can be part of the team, an important part of the team, but it needs some really high-level resources, I think. The emphasis on risk modeling in the book, I think, is really a brilliant approach to describing the problem. So many problems in the world, people are, you get a thick report and it provides you with, here's my best estimate, and management or whoever the audience is thinks, well, smart person did it, they spent hundreds of hours, this must be the right answer. Well, it's never the right answer. The world always changes a little bit. And risk modeling, I think, is really a very helpful addition to the discussion. When we've done risk modeling for insurance companies, in fact, I think some of the most important things that come out of it aren't even the analytics. Some of the most important things that come out of it is the conversation that goes into it, getting people talking about what are the elements that create the uncertainty, how do they fit together, where are the correlations. The journey you take in building the model, as we were talking earlier, that's at least half the journey. That's by the time you've had those learnings from talking to the different experts, people who are experts in agriculture and experts in communications and so forth, you've learned a lot of what you need to know. And probably the second most I've seen come out of using risk modeling is it gets the conversation started about uncertainty. Suddenly, instead of giving management one answer, you're saying, well, it could be in this range, but even that we're not so sure about. It might be, it might not be. Different things could happen. It doesn't understand all the bits and pieces that are. If you just get the conversation started about uncertainty and about the fact that the world is not going to turn out as on our plan that we take to the investors, that's a tremendous contribution to the dialogue that needs to occur. So I really thank the authors for stretching my brain with this and stretching the brain of everybody who takes the time to spend time with it, and more importantly, I think stretching the communications that can occur among the community of people who want to be involved in these products.
I start by thanking Sam for making me the last speaker. I'm glad the technical people have spoken before me. I was one of those who found the book amazing, full of formulas, full of terminologies I haven't heard anything about. I've always been a simple insurer all my life. I knew only indemnity and catastrophe. But the issue of probability, yes, a bit of it, but making prediction by probability and even making payment by probability was something I couldn't sleep with sometimes. So when we were invited, Sub-Saharan Africa were invited to a 2-day session, expert session, or executive session rather, in Accra, Ghana. We invited a few players from each of the markets who have some business in agri to have an appreciation of what exactly Shadreck was going to talk about. A few of my colleagues who were operators from my market was asking questions, trying to take time to understand the concept of the book. I advised them. I think that is why that's the price for my advice that I was invited here. I advised them to relax. It's too complicated for simpletons like them. But then the group also arranged a technical session for a week after the executive session for technicians of the operators and the regulators from the sub-region. And the young chaps understood it better than us. And I took time on my way back home and a little time when I got home to try to understand the book. Thank God I appreciated the first part, but the second part was definitely not for me. And when I was invited here to share our experience, I thought I will first commend the World Bank Group for supporting this publication and for planning to support it further, because at the Accra outing, everybody that attended wanted more. The sub-region had very little exposure into this kind of insurance approach to agri insurance. Everybody was into crop insurance, indemnity, catastrophe. Nobody had any inkling on how to do index-based approach. A few companies ventured into, most likely from their reinsurance advice to get into it, because a few European reinsurers are supporting some operators in some of the jurisdictions. But regulators like me were caught a little unaware of the development in this area. So when we had the Accra outing, we kind of realized that this can be an excellent opportunity to push in financial inclusion, especially to the small farmers of Africa. And the few countries that have started, we have a few cases around Africa, Senegal, for example. Malawi, he mentioned some countries in the Southern Africa have already got into this, and Eastern Africa. But the experience they have had is always to convince the farmer to buy the product. And in some markets like mine, Nigeria, like I was telling Shadreck before the meeting started, that in Nigeria we build houses starting from the roof. Yes, I'm sure you'll be wondering. Ask the actuaries, I'm sure they will explain it. We have in Nigeria a peculiar situation where we have a demand for the products when we don't have the technicalities for the products. Government have attempted to promote agric, and many false attempts were made earlier. But now the central bank floated a company and funded the company to finance agric. And 2 years into the project, they realized they need protection. And they realized insurance protection is the best. And they contacted, I think, the World Bank and some experts around the world. They were advised to talk to a particular consultant who is one of the best in the world. Another consultant has approached us as regulators and the industry with their requirements for which we have no idea of. So that's building the house from the roof, if you understand the concept. Now we have been kind of tickled by what we experienced in Accra and what we have seen in the book. And now we want more because we already have a demand for this concept. We need expertise at the developmental level of the products, product appraisal, and we need serious knowledge sharing with other countries that have already started the concept in parts of Africa. While the few that have started have got their own experiences, they had operated as silos from the other region, the whole of the region. So definitely there's need to share some knowledge, to learn from them. But most importantly, there's need to have expert consultants that will work with us on product development and also assist, like Raj says, talk to government who has some data that we can develop from. But we need to build technical capacity both at the regulatory part of the industry and also at the operators part of the industry. Now, the Nigerian particular example I mentioned, they've decided to go ahead with some players in the market because the wet season has started in Nigeria last month. And they've already provided financial support to farmers, but they didn't want it without insurance. And as regulators, we didn't have any idea of the products they want. But the consultant they are working with have already developed something which they believe will provide them an initial start. So typical of a regulator who is not very involved will say, oh, go ahead, but we're not getting involved. But that's not good enough. So with the dry season coming up and with the support that the group has offered, we wish we'll be supported by technical expertise to develop the data, to develop the capacity, and to be able to learn from the parts of the world that have already started. Thank you.
Thank you very much for those words. I've learned as a moderator never to try and summarize good content when you hear it. So I won't even try. The one thing I would like to do is to thank Jayla for joining us. I think your message on knowledge management is being heard loud and clear. I'd also like to thank Huybert and Shadreck who have brought us here and the work that they've put into this. As for our three guests, I think, Raj, you've made a very passionate case for risk modeling in a world gone mad that I fully support. I think, Bob, your optimism for the book, but with very sound words of wisdom in terms of being careful with the model. It's not as easy as the authors have made it sound. I think that's a very important message. And Mohammed, I don't buy for a second your modesty about not being a simple insurer. You're that type of commissioner who knows how to ask the right questions. So thank you very much. I think you're very right in challenging the team to continue to use this model, this book, in terms of expanding its usage on the continent. So to all of you, thank you very much. In a few seconds, I'd like to invite all of you to head that side of the room. There are drinks, and then turn to the right. You will find plenty of food. while we invite our guests to take a few pictures up front here with the authors. And so with that, thank you very much for joining us today.